What if I told you that some of the most valuable housing benefits veterans rely on today could quietly disappear in less than a year, and most people won't even see it coming? While everyone's busy watching the headlines, a quiet shift is happening behind the scenes. Budget deadlines are approaching, temporary funding is expiring, and key veteran support programs are sitting on the chopping block. These aren't fringe benefits. We're talking about real, life-changing support systems that help veterans keep a roof over their heads, avoid homelessness, and build lasting stability. The scariest part? Many of these benefits don't make the evening news. They expire not with a bang, but with silence. And by the time people realize what's been lost, it's often too late. In this video, we're breaking down 8 VA housing benefits that could vanish by 2026 unless something changes. And if you or someone you know relies on them, now is the time to act. Stay with me, because what's being overlooked right now could directly impact where you live, how much you pay, or whether you qualify for help at all. And once these windows close, there's no guarantee they'll reopen. Let's get into it. One of the most overlooked benefits that could disappear by 2026 is the VA's Specially Adapted Housing SAH grant expansion. This temporary boost was introduced during the pandemic to meet rising demand from disabled veterans who needed accessibility modifications, things like wheelchair ramps, walk-in showers, or widened doorways to live independently. But here's what most people don't realize. This expanded version wasn't permanent. It was tied to emergency legislation that's set to expire unless Congress takes action. Right now, eligible veterans can receive up to $109,986 through this grant, a dramatic increase from the previous cap. But once the clock runs out, that amount could drop significantly, limiting how much help you can get to adapt your home. For vets with serious mobility impairments or service-connected injuries, that reduction could mean the difference between staying at home or being forced into assisted living. What's worse is that this isn't being widely discussed. There's no warning email, no press conference, just a quiet rollback that catches people off guard. If you've been considering home modifications, whether for yourself or a loved one, this might be your last real chance to access the full benefit before it shrinks. So, before time runs out, ask yourself, have you taken full advantage of what you're entitled to while it's still on the table? Because this isn't just about saving money, it's about keeping your independence intact. Another benefit on the chopping block is the VA's temporary waiver of loan limits for the VA Home Loan Program. Since 2020, veterans have been able to purchase homes above the standard conforming loan limits without needing a down payment. This change opened the door for thousands of veterans, especially those in high-cost housing markets, to compete fairly in a red-hot real estate market. But here's the catch. This zero-down flexibility is tied to special provisions that could be rolled back as part of larger housing reforms or budget tightening. Once that happens, the VA loan will once again be subject to strict regional loan caps. That means if you're trying to buy a home in places like California, Washington, D.C., or parts of Florida, you could be looking at needing tens of thousands of dollars upfront just to close. The danger here isn't just financial, it's psychological. Veterans who've spent years building credit and saving responsibly may suddenly find themselves priced out of their own market. And many of them won't even know why. Because these changes won't make headlines, they'll just quietly take effect, leaving families scrambling and benefits feeling like they've vanished overnight. If you've been thinking about buying a home or refinancing to tap equity, this window might be the most generous we'll see for a long time. Once these loan limits return, the opportunity to buy high, without high risk, could disappear just as fast. Another overlooked benefit that may quietly disappear is the VA's Interest Rate Reduction Refinance Loan, or IRRL, commonly known as the VA Streamline Refinance. For years, this program has allowed veterans to refinance their existing VA loan into a lower interest rate with minimal paperwork, no appraisal in most cases, and no income verification. It's been a lifeline for thousands of families looking to reduce monthly payments without jumping through the usual hoops. But here's what most people don't realize. The current version of this program hinges on market conditions and policy flexibility that's being reviewed. If inflation continues to pressure interest rates, or if regulators tighten loan oversight as a response to past abuses, this easy refinance option could be scaled back or come with new requirements. There's already been talk behind closed doors about adding stricter eligibility checks and limiting how frequently a veteran can refinance using this option. And the impact? It could be massive. Many veterans used the IRRL multiple times over the past decade to stay ahead of market shifts or reduce housing costs during financial strain. If those doors close, you could be stuck paying more than you need to simply because you missed your chance to act. So, if your current VA mortgage has an interest rate that's even 0.5% higher than today's average, it might be time to explore this option while it's still wide open. Because if policy winds shift, and they often do, what feels easy today could turn into red tape tomorrow. One benefit that flies under the radar, but could vanish before most veterans even notice, is the VA's Specially Adapted Housing SAH grant. This program offers eligible veterans with certain service-connected disabilities financial support to adapt their home for independent living. We're talking about widened doorways, wheelchair-accessible bathrooms, or even a fully customized build to accommodate mobility limitations. Now, here's what makes this urgent. The funding for SAH grants isn't unlimited. It's capped annually by Congress, and once the budget's gone, new approvals are either delayed or denied until the next fiscal year. But there's more. Lawmakers are quietly discussing tightening eligibility requirements in the next budget cycle, potentially narrowing the definition of qualifying disability. That means veterans who would qualify today could be shut out tomorrow, even with similar health conditions. It's already competitive. In some regions, wait times stretch out for months, not because the VA is dragging its feet, but because the demand outpaces the funding. And if proposed changes go through, it won't just be harder to qualify. It could become nearly impossible for new applicants without the most severe disabilities to get approved at all. If you or someone you know have mobility issues and believe this grant might be in reach, waiting could be a costly mistake. Once the eligibility narrows, even the best documented case might not make the cut. This is one of those programs you don't think about until you need it, and by then, it could be gone. Another benefit that's dangerously close to the chopping block is the VA's interest rate reduction refinance loan, better known as the IRRL or VA Streamline Refinance. On paper, it's a lifesaver, allowing veterans to refinance their existing VA loan to a lower interest rate without needing to verify income, get a new appraisal, or even provide full credit documentation. It's fast, simple, and often requires little to no out-of-pocket cost. But here's what's not being talked about. This program is under review, and insiders say major changes could take effect as early as 2026. Why? Because policymakers believe too many borrowers are using the IRRL to refinance repeatedly, which, while technically allowed, has triggered scrutiny from Congress and housing regulators. The term they're using is loan churning, and it's already led to whispers about stricter eligibility standards, longer mandatory wait periods between refinances, or even a complete revamp of the program. And here's the scary part. If interest rates drop again, and these new restrictions are in place, you may be stuck watching from the sidelines while others refinance and save thousands. The current structure, no appraisal, no income verification, fast closing, is rare in the lending world. And once regulators close that loophole, it won't come back. If you're a veteran sitting on a VA loan with a higher interest rate, waiting could cost you not just a few $100s a month, it could mean losing out on a benefit that may disappear without much warning. There's no alarm bell, just quiet paperwork behind the scenes that rewrites who qualifies and who doesn't. There's another lesser-known VA housing benefit that many veterans overlook until it's too late. It's the Specially Adapted Housing SAH grant, designed to help severely disabled veterans build or modify homes to accommodate their needs. On the surface, this program sounds secure, even permanent. But what most people don't realize is that funding for this grant isn't unlimited, and it's already on thin ice. The SAH grant helps veterans with certain service-connected disabilities live independently by covering things like wheelchair ramps, widened doorways, or fully accessible bathrooms. As of now, eligible veterans can receive up to $117,000 to modify a home. That number is generous, but it's also under constant budget review. Each year, Congress reassesses how much money gets allocated to this benefit, and there have already been quiet conversations about capping future disbursements or limiting how many times a veteran can use the grant across multiple homes. And there's a deeper issue at play here. As more veterans' age and disability claims increase, the number of people applying for SAH benefits is rising fast. That growth has drawn attention from budget hawks looking to trim federal spending. The fear is that by 2026, the rules could tighten not just in how much veterans receive, but also in who qualifies. Subtle language changes in federal housing bills already hint at targeting high-need applicants, which could mean stricter thresholds for what counts as a qualifying disability. This isn't just about money, it's about independence. For many veterans, this grant is the difference between being trapped in a home that doesn't fit their needs and living with dignity. If you're eligible now but think you'll wait until later, that decision could come back to haunt you. Because if the funding dries up or the requirements change, you might find yourself left out of a benefit you rightfully earned. The opportunity is here now, but it might not be for long. There's one more benefit that most veterans don't even know exists, yet it could save you tens of thousands of dollars. It's the VA's Temporary Residence Adaptation Grant, or TRA, and while it might sound niche, it's a hidden gem for veterans living with family or staying in a temporary location during recovery. But here's the part that most people don't see coming. This grant is also on the chopping block, and if current budget trends continue, it may disappear by 2026 without much warning. The TRA grant is designed for veterans who qualify for a housing adaptation grant like SAH or SHA, but who aren't living in their own home. For example, if you're recovering at your child's house and need a ramp installed or a bathroom remodeled to accommodate your disability, the TRA helps cover that cost. It's a bridge, a way to maintain independence and safety even when you're in a temporary setting. But what makes TRA so vulnerable is how specific it is. It doesn't serve millions, it serves hundreds. And that makes it an easy target for lawmakers looking to trim non-essential programs. Even now, there's talk about folding this grant into broader programs or sunsetting it entirely due to low utilization. But here's what that mindset misses. Just because fewer people use it doesn't mean it isn't vital. For those who need it, this benefit is a lifeline. Another challenge? Awareness. Most veterans don't apply for TRA simply because they've never heard of it. VA reps don't always mention it, and it doesn't get the attention other programs do. That's by design. Smaller programs with less visibility are easier to phase out without public backlash. So, if you think you might need it, even if your living arrangement isn't permanent, start your paperwork now. Once it's gone, it may never come back. This grant has helped veterans transition safely between homes, surgeries, and rehab. But if 2026 brings a wave of cuts like some policy experts predict, TRA could vanish quietly, leaving a lot of veterans scrambling for solutions that no longer exist. And then there's the wild card, loan assumption. It sounds dry, but this one detail could become the single biggest financial advantage veterans lose if changes take hold in 2026. Right now, VA-backed loans come with a powerful hidden benefit. They're assumable. That means when you sell your home, the buyer can take over your VA loan, including the interest rate you locked in, even if it's much lower than current market rates. And in today's volatile housing market, that's a golden ticket. Imagine you locked in a 2.75% VA mortgage back in 2020. Now fast forward to 2025, and rates are hovering above 6%. If your buyer can assume your loan, that instantly makes your home far more valuable because they're not just buying your house, they're buying your interest rate. For many sellers, this translates to faster sales and potentially higher offers. It's a massive selling point. But here's the problem. Not everyone in Washington thinks loan assumption is fair. There's growing pressure from big lenders, and even some real estate lobbyists who argue that assumable loans create an uneven playing field. They claim it slows down mortgage turnover, hurts new loan origination fees, and gives unfair leverage to VA-backed sellers. Behind closed doors, discussions have begun about modernizing the assumption process, which is often code for limiting or eliminating it entirely. And if that happens, veterans lose twice. First, they lose the edge in the housing market. Second, they lose one of the few tools that give them financial flexibility if they need to relocate, downsize, or sell quickly. And since assumable loans aren't widely understood, even by many realtors, it's the kind of benefit that could be gutted without much pushback, simply because the average person doesn't realize what's at stake. If you're a veteran with a VA loan, now's the time to understand how assumption works, and more importantly, how to position your loan as an asset, not just to you, but to whoever might want to take it over. Because if the proposed changes go through in the next budget cycle, this hidden advantage might quietly disappear, taking thousands of dollars in value right along with it. Looking back at everything we've just covered, one thing becomes crystal clear. These VA housing benefits weren't just created to help you buy a house. They were designed to give veterans a fighting chance at long-term stability, ownership, and even generational wealth. But as we've seen with other programs in the past, when attention fades, protections can vanish quietly. That's the danger we're facing now. Between rising budget pressures, shifting political priorities, and growing demands from the private housing sector, many of the benefits we've taken for granted, zero-down loans, funding fee exemptions, rate assumptions, are now under quiet review. And unless more veterans are aware of what's happening, these tools could be scaled back or restricted before most people even realize they're gone. But here's the good news. There's still time to act. Time to lock in what's available. Time to use what you've earned. If any part of this video made you stop and think, don't wait. Talk to your lender, revisit your eligibility, or help a fellow veteran understand what's on the line. Because when programs change, they rarely change in your favor. And too often, the people most affected are the ones who served and stayed silent, believing the benefits they were promised would always be there. They won't be. So, if you've learned something today, drop a comment below and tell us what surprised you most. And if you know a veteran who's been meaning to use their VA loan but keeps putting it off, send this their way. It might be exactly the push they need. Your feedback, your voice, and your shares help keep this information alive. If you haven't already, hit that like button, subscribe, and turn on notifications so you don't miss out on future updates that could directly impact your benefits. Thanks for watching, and more importantly for staying informed. We'll see you in the next one.